Hi folks, I'm Sean Crabtree.
And I'm Cameron Bailey.
We don't want to change the way you do business.
We want to change the way you're thinking about your business.
We want you to have better results, happier clients, and make more money.
Let's get it started.
And welcome into Dental Profits, the show that comes to you live each week, talking about ways to have you with happier clients, better results, making more money, and enjoying the ride. I'm so excited to have a guest today with what I think is one of the top challenges that we run into, not only in dentistry, but in small business in general. And that is the conversation about accounts receivable. I have the actual ninja with us today, Andy Grover Cleveland. Andy, welcome aboard. Glad to have you. You and I have worked together in a couple of different ways in the past. I know you talk to my business partner, Cameron, on a regular basis. And yeah. I hate to say it, but you actually know Kevin Barnett. So I don't know if that's good or bad. I don't know. What do you think?
All I know is I never think of myself as short until I stand next to someone like him. And then I'm literally creaking my neck up to look at him, and I realize, and then he wears cowboy boots to put insult to injury and just makes me feel like this big. He's a great guy. I just wish I had his hair.
He's like 7'2" with a lion's mane, right?
Yes. He's like a gentle giant, like the big cats, they're always really gentle and nice. And that's Kevin.
That is Kevin. Well,
yeah.
The guy is an absolute technical genius. I am happy to have you as a genius in the world of accounts receivable. And I see you have the sword above you there.
Yeah.
I mean, for 20 years, you've been chopping away at what I believe is one of the biggest challenges, and probably, in my view, and I'd love to know what you know, the least well-managed areas in small business in general, not the least of which is dentistry. And I know you've been in dentistry for 20 years. Yeah. Tell us a little bit about what you do at Dental Practice Ninjas. You got a business partner in all of that. Tell us about what you guys do and a little bit about your story.
Okay, great. Well, again, it's an honor to be here. I love your energy. It's really very unique. And I love also the theme of your podcast, that you're helping people collect money, which people almost feel guilty about that. And these guys, they go to dental school forever. They're studying all day. They don't have lives, and they spend tons of money, going to tons of debt to join dentistry. And it's really time for them to reap the rewards of a great profession. And so I want to help practices basically streamline their patient accounts receivable process. And you can either stick your head in the sand and make pretend it doesn't exist, or just realize, hey, it's just like that weird uncle you have at Christmas every year. He's always going to be there. It doesn't matter if you invite him or not. Patient AR is a fact of life. Insurance companies aren't going to pay. They're going to send the money to the patient. You're going to be off on your estimate. Someone's going to lose their job, get divorced. Their dog's going to bite them. There's all these things that happen. And so essentially, I help practices with handling that part of their business so they can really focus on things that matter, like insurance, social media, marketing, all the things that
diagnosis,
really make a much bigger impact.
Diagnosis, right?
Yep. Yeah. And dentistry. Forgot about that.
Yeah, and dentistry. And so I'm curious. So tell us a little bit how you do what you do. I mean, you've been doing this for a lot of years, 20 years.
Yep.
I've been in dentistry for 20 years as well. I've seen probably all of the nightmares that you've seen. But tell me, in terms of what you do, I mean, is this a scenario where you're actually handling the accounts receivable for them? You coach them on better verbiage, or how does that look?
Yeah, it's a little bit of all of the above, Sean. So we have software called TechMD. TechMD basically integrates with almost all dental software, so all the main players. And what this does is it gives the practice a dashboard where they can see what patient and insurance AR is outstanding. And we're hoping that that provides a to-do list or an action, a work list, if you will, so that they can say, oh my gosh, why hasn't this insurance company paid? It's 45 days. They're usually great on paying. Right. And then they can follow up with that. And then it also allows them to interact with our company. and we provide a full suite of services. So we can pretty much handle anything from the EOB, when that patient gets that patient responsibility statement. We can pretty much handle anything from that point forward. Now, we are concierge in the fact that, not all practices are the same.
Right.
Some practices, most practices at this venture, they just want the patient AR off their plate. In times past, is very manageable. You had a couple people up front that did a bunch of different things. In my opinion, there's been a swing where dentistry has become so much more competitive. They have to be experts in 30 different things. And probably one of the least profitable things they can do with their time is contact patients to tell them they know money that they already owe. They're already out of pain. There's no motivation. There's no recourse.
That's a really good point.
When they could be talking to an insurance company, they could be getting their case acceptance numbers up by activating those people, getting people back into the hygiene department, doing things that really have an impact. And if you really value your practice and you want to have that patient have a great experience, it's almost mutually exclusive to simultaneously give that patient a fantastic experience, be patient focused, and bark at people who owe you money. Right?
Exactly.
It's a disconnect there.
So
and I
let me
fill
ask,
that void.
So Andy, you've been doing this for a lot of years. Okay, first thing first. If I'm listening to this and I don't have any earthly idea, here's what I know about AR. It stands for, let's say, accounts receivable. Let's pretend I'm listening to this or I'm watching this, and that's all I know about AR is it stands for accounts receivable, and I understand that it means that it's money that's owed to me on account. So is there a healthy, and what is healthy, based on what you do? And how do you view that? Current 30, 60, 90, over 90? Or just, what do you believe is a general rule for healthy AR? And is it different for specialties or whatever?
Yeah, it's a great question. I look at this fairly simplistically. There's really two ways to kind of look at this. Number one is the book answer, which we all have book answers. Like we went to 7th and 8th grade, right? They taught you algebra. I still have yet to learn how to use algebra. Like that was a total waste of 2 years.
I just had this conversation with my 14-year-old.
Yes. Yeah. So you have to play the game and say, oh, yes, you're going to use this. And
use it all the time. No, that's right.
It ain't going to happen.
Right.
So you just waste 2 years of your life learning algebra, and then you never use it. So there's a book answer. Like I can give you the correct answer, which most practices view it. There's a threshold. If you have a half a month's to a month's worth of your average monthly production in AR, that's generally considered acceptable.
Now, is that different for, let's say, if I am a heavily involved PPO type practice versus cash fee for service? Well, okay, I've learned that fee for service means a lot of different things.
Right.
So let's say, is it different if I have a whole bunch of PPO relationships versus I don't accept insurance benefit and I file? Is it different?
Yeah, I haven't really strategically thought about it in those terms. Most of the people that I attract are typically high-performing dental offices, technology-driven. A lot of the young guys coming out of school, guys and gals, they're looking at, hey, how can I be healthier? So think about in terms of getting shape. You could be really ripped and you may be dissatisfied with that, right? You're at 5% body fat and you're disappointed that you're not at 3. Right. Well, hey, listen, I'm at 30% right now. I'm not happy, but if I get down to 25, I'm okay. Like I'm at my comfort zone. So everyone has that comfort zone on what's acceptable and what's not. Many practices are at 95%. And they hire me so that they can get as close to 100% as possible.
Gotcha.
So it really depends on the practice, how their cash flow, how their cash flow is working, how they're staffed. If they have more people than things to do, then it doesn't make much sense to hire me to do their billing and their follow-up. But if you have one person and you're running $1 million practice, you have one person at the front to basically do the scheduling, the check-in, check-out, like there is absolutely zero time. for that person to do billing. So I would be a great fit there. So hate to give you kind of the vague,
no, I get it. It's really based on the comfort zone.
It really is.
It's really based
on the individual.
So I'm curious, what is the biggest challenge that you run into, like, consistently across the board? What is the biggest thing that you see when it comes to an everyday, typical general practice that maybe is not put the focus into the accounts receivable that they could or should?
It's really a denial at its finest. We're all subject to this too. I mean, we all have things that we just brush to the side. We'll get to it one day, that type of thing. And really, I think societally, practices have been conditioned to think that they're the bank. Like, they are responsible because they're in healthcare. They help people. Since they're such great people, by the way, paying is optional. You go to the grocery store and you try to check out and not pay for your groceries. You don't be like, dude, I'm going to get you back next week.
Right.
Drive off from the gas station, don't pay. Guess what? They're calling the police. But dentistry, you can have a temporary crown in your mouth for 3 years and everyone thinks that's fine.
That's totally true. Listen, we see that all the time. You and I have talked about this before. We see that all the time, and we kind of approach things from a little larger perspective. I mean, you've got your slice right there that you're really good at, but man, we see that all the time. I was actually speaking a few years ago at the Michigan Dental Association, and I popped into another room in between when I was speaking there, and there was a guy on finances there who was talking. He threw this out. Now, this has been several years ago. Here's what he threw out. He said, guess what the 3 top lenders in the United States of America are? Okay. Number 1 was lending institutions, right? No brainer there. Banks, finance it. Number 2 was motor type credit. Honda motor credit, Ford motor credit. Number 3, general dentists in the United States are in the top 3 in terms of being owed money. That's amazing. And there's no reason for it. I mean, you and I talked about this as well. There are companies that are vying every single day to be able to offer patient financing to your patients.
Right.
And there are large and there are small and there are bunches of them. What do you believe about that?
Yeah, I mean, I think you should do what's right for the practice. There's no magic pill, right? That this is a perfect thing for everybody. It depends on your demographics, what type of practice you're building. Are you starting up? Are you a newbie where you're just trying to get every patient in the door you can? Are you established practice? But the tools are all out there. I mean, you have tools that will accept, people with higher beacon scores. Those are great. You get your money back next day. There's, I think that should be a definitive part of the plan. And then you've got other ones that really focus on, hey, this person's made some mistakes. We're going to accept it, and you're going to have a higher interest rate, but it still helps with case acceptance because those people are normally walking out the door. And then I do think strategically, sometimes it might make sense to either give it away as charity, like it's like loaning money to a friend. Like you never loan money to a friend unless you are comfortable that they're never going to pay you back, right? So
you're really giving it away, in other words.
Huh?
You're really giving it away, in other words.
Yeah.
You're not looking
and
for
I
it to
think
come
that's appropriate in some instances to build patient loyalty, or our practitioners, they're in healthcare. They are saving people's lives. They're stopping people from dropping dead of heart attacks, cancer, diabetes. Like, there's a big picture here. And I think it's a great way to build patient loyalty. Do you want 100% finance all your patients? Absolutely not. Big mistake. But I don't see why, you can pick and choose your battles as long as you're not putting your next mortgage payment based on those assumptions. I think that's fine.
So in other words, what you're saying is if you've gotten to the point where you have a little abundance and you want to give something back and your concern is not whether it comes to you, you're really giving it with the right kind of heart,
right.
Go for it. Yeah, I know.
Yeah, it's a great way to build patient loyalty.
Yeah. I'm
I mean,
curious, Andy. Let me stop you a couple things.
Sure.
So I want to get back to TechMD in just a sec.
Okay.
But before we do that, I'm curious to know. There are people who are watching this or listening to this that would love to know, and you're the ninja. And I know I'm putting you on the spot here, but in terms of third-party financing, okay, who do you see that has the lower acceptable rates and so forth, and what do you see as opportunities? And I know you work with all of them, as do we.
Yep. Yeah, I'm not really partial to any of them. I mean, obviously, Care Credit's a great company.
Yep.
They have their niche in the marketplace, and then I always like having kind of what I would consider to be a subprime person, maybe someone that would fill in the gaps that maybe they wouldn't accept. And that's, I guess, maybe like a lending club or Prosper. There's a whole bunch of other ones. I'm not really partial or educated enough about everything they do to give recommendations on that. And then also, there's some where, you can just automate credit card payments or bank drafts and carry it basically yourself. And I think those are selectively worth taking a look at too, especially if your patient really needs the work and you want to help them, right? Not everyone that walks in your door lives in Beverly Hills. I mean, we live in the South. If you were to just say, hey, I'm going to take the top 10% of income earners in my town, there's a lot of fill-and-drill dentistry that you would never get, and you would be really limiting the profitability of your practice, in my opinion.
You know what? Yeah. So Green Sky. Have you heard of Green Sky?
I have. Yeah, I'm
telling you, these
talked
guys.
to those guys quite a bit. They're making a huge.
They are absolutely making a big splash. I'm really impressed with these guys in terms of how low they go with the FICO score, but also the ease of use. Yeah. This is the only company that I've run into where literally, you've got the patient in front of you. You can ask them for their driver's license, scan it with your phone, and it populates the application right there. Really good stuff. Green Sky Financial. We really
they're making
like those
a big move right now.
We really love those guys. I tell you. Tell me about TechMD. So this is the dashboard that you're talking about, where basically it gives the practice the opportunity to take a look at, if I understood you correctly, patient AR versus insurance AR. It's going to break it down for you, 30, 60, 90, et cetera. Is that right?
Yep, correct.
So go ahead.
No, I was about to say it's a dashboard that basically works with almost all dental software, and what it takes is kind of that denial process where you have to run laborious reports and whatever software to get, and then you kill 20 trees when you print it out. You're getting kind of an archaic report for the most part for AR, and basically what TechMD does is it brings it to life. It basically syncs with the software every evening, so it's getting very close to real-time data. So if someone ran delinquent last night, it's on your dashboard. Awesome. You can look at that in the morning and say, hey, what's going on with Mrs. Jones? Like, this is weird. She always pays. And then maybe you decide to either reach out to the patient or, see if she's on the hygiene schedule or send her a statement, or maybe it's nothing. Maybe you follow up with the insurance company or she's back on the calendar next week. But again, it's kind of top of mind awareness. And it also is a conduit to my company. It's a bridge that basically bridges the practice management software to Tech Collect.
Awesome.
And so it's a data transfer bridge that will safely and securely get their information to us so that we can actually work that account for them. Most collection companies don't have the resources or the technology to support dental offices, and that's why there's so much frustration around collection companies. You bring up the C word, people start getting upset, and rightly so. Right. Poor service, alienating patients, no technology, archaic sales process, no customer service. So I'm doing my best to try to change that perception to a much more professional service offering that is more prophylactic in nature. Instead of just pulling the tooth when it's dead, right? It hurts. It's traumatic to the practitioner and to the patient. The outcome's very poor. But if we can get involved early, 30, 60, 90 days without hurting that relationship, prophylactically, not only are we going to recover more money for the practice, we're going to get that patient in back on the schedule, which is what every practice in America wants. So it's a win-win.
And I can say that's who you are. I mean, anybody who follows you on social media, by the way, you're all over social media. I appreciate very much the focus that you have on that.
Thank you.
I understand.
Dental's all that I do. I basically do not have a life.
I was going to say,
let's just put it out there for what it is.
I very much appreciate the amount of commitment that it takes, and I understand that as well because I have no life either, and so I appreciate that. But I was going to say, anybody who follows you totally understands that you are not, and you're right. There is this underlying sort of view that when it goes to collections, it's that's kind of it anyway. You only turn it over to something like that, when you have no intention of ever dealing with the patient again, and all of those sorts of things. And you're doing a really good job of changing that. I want to acknowledge you for that, Andy.
Thank you.
I'm curious. Back to my my analogy. A half month, as the book, as you said, the book numbers are. Pretty well speaking, like a half a month of your average production, or to a month of your average production would be, and over that is really is really not healthy, and I tend to agree with that. We tend to have our guys closer to that 50%. I'd love to know, one of the big things, and you and I have never talked about this, so I'm putting you on the spot on the camera, and I realize that.
Go for it.
One of the things that we run into quite often is, you mentioned earlier that focus is really the big thing. I mean, this is the issue with accounts receivable, is it's just not something that's focused on. We work very hard to have a strategy built all around it. And our belief, too, is the best way to handle accounts receivable is to not have accounts receivable, right?
Sure.
And just eliminate them to begin with. But there's a big move, it seems to me. I've been doing this for 20 years, and it seems in the last couple of years, really, there's been this big push for these in-house sorts of financing things, and I'm not talking about just a, like the scenario we were talking about earlier, where maybe I take a credit card now and then I zap it again later.
About membership plans.
Membership plans. What are your thoughts on that, and what have you seen over the years?
Yeah, I mean, last time I heard, it's like 50% of all Americans have dental insurance. And so everyone's jockeying for that same population. So it's very natural to say, well, why would I get into that ultra competitive PPO environment and fight for all the same patients when I can finance people myself? And I don't have health insurance. My wife actually just got a crown last week. And I'm sure that my dentist, he's a fantastic dentist, but I'm sure he's happy about that. He doesn't have to discount his fees that much. We're paying in cash. I mean, that's pure profit to him. So it works out well, but I think there's a huge shift to people doing these membership plans. And I don't see it hurting the business. People have to find a way to make their practice more profitable. And there's only so many hours in the day. I mean, there's only so many fillings, crowns that you can do in a day, right? If you can increase the value of each procedure, then that's more productive. I mean, is that's pretty much what you do, right?
Well, I'm curious. So why would you do a membership plan versus, when you've got 12 to 15 companies out there that are willing to give you at any point in time 0% financing for 36 months or whatever? Where's the
It's just like, I guess, what kind of jeans you wear. Like, each person has their favorite. And I think the same thing applies here. If the risk is worth the reward, then people do it. If it's not, people don't. So I'm not a firm advocate of everyone getting on membership plans. I don't think it's probably right for everybody, but I think it is right for certain people that are looking for another revenue stream. Well, I don't see any harm in that. I mean, do you think that it's causing
one of the big challenges that we run into?
Because you have a different viewpoint than I do.
Well, one of the big challenges we run into is what you said earlier. you know, AR is an issue, frankly, because it's not focused on. There's no strategy behind. There's no strategy in front of it. There's no strategy and implementation that prevents it. And a lot of times, what we find is a twofold situation. If you learn to create value, then you don't have to be involved in price. If you can couple the fact that you can create value for your services, for your time, for your doctor, for your team, and then also input a scenario where it's interest-free, and the patient doesn't have to come out of pocket with any money. It's a it's a win all around. It's
and if anything goes wrong, they don't blame you.
Well, that's true.
They have a company they're doing it. And we do the same thing. It's good cop, bad cop.
Right. It's a good point.
People hire us because they don't want to be the bad cop. We'll be the bad cop. Let them be the good cop. Everybody wins.
That's a great way to look at it. That's a great way.
Hey, can I ask you something?
Please.
So we're seeing a trend. Sika Software did a study, and they're the kings.
You and I were talking about that, right?
Yeah, dental data analytics. They measure everything in a dental office. And looking at the numbers from their study, 2011, 2012, 2013, 2014, 2015, every one of those years, AR increased. So 2011, I'm just rounding, 85 grand. 2012, 93 grand. 2013, 104. 2014, 115.
Average.
2015, 124,000. Why is AR going up? I don't know.
That's a great question. Listen, I have my theory, and I believe it's because what you said. People, listen, in my view, and I would submit that this is what you run into every day. I'd love to know. In my view, I've come to realize that doctors want to do dentistry. They want to be busy. They want to do dentistry. They want to be in somebody's mouth. They want to feel like they're helping. And there's very little focus at all on a strategy to prevent it. And there's very little focus at all, in my view, on cleaning it up. If it weren't for people like you spreading the word and people like us spreading the word, I think it's, listen, you know what, this is terrible to say, but my experience is that doctors, unfortunately, look at the health of their practice in terms of, do I have any money in the bank?
Right.
And there are so many other ways to be able to gauge that, to be able to actually put money in the bank, that I think that's the issue. It doesn't make any sense when you think about it, because you and I are out there spreading the word, and there are companies every single day that are coming out of the woodwork. Every day there are new companies that I've not heard of that are just scratching and clawing to be able to offer patient financing. I read a stat the other day that said as much as 72% of Americans have dental insurance in the U.S. 72% of Americans.
Wow. And
that number's going up in 2018. So now I don't know how much of that is Medicaid or whatever, but that was the stat. So when you think about it, it doesn't really make any sense. The only thing you can attribute it to is just what you said earlier, which is focus. It doesn't make any sense. The other thing I would throw at you is, my belief is, and I'd love to know what you think, we spend a lot of time in the last 20 years making sure that people understand how to create value for the doctor, value for the team, value for the time, value for the dentistry, and all of those sorts of things. When you think about it, healthcare is competing against the professional arenas that are going after the same discretionary dollars.
Sure.
And you add that to the fact that somebody woke up this morning and decided, today's the day I'm going to go get the flat screen television at Best Buy.
Yeah.
But very few people woke up and said, man, I got to have that crown, and today is the day.
It's crazy. I think our society is so askew on it. Like, I'd rather not drop dead of a heart attack than have a 60-inch flat screen. Now, that's just me. Maybe
there are lots of people who view it, though, and they go, you know what? That'll never happen to me. Let me go get the television.
Right. But what about your wedding photos or the family reunion, and your smile looks absolutely awful, but you drive up in the $50,000 new truck? It's like, where are your priorities? I get, maybe I just don't fit in. I'm fairly simplistic, fairly humble, And
well, let me ask you a question.
I want to live a long time.
Okay.
That's important to me.
So let me ask you a question about this. When it comes to AR, do you believe that because there's not a focus on a strategy, and do you believe that because there's a lot of AR that's sitting out there and there's growing, you believe that that might have a bearing on whether or not we're creating value? In other words, what I'm trying to say is, do you see what I'm saying?
Yeah, people don't value what they don't pay for.
You've been doing this for 20 years. I mean, you're the expert. What do you think?
Right. No, actually, that's an interesting proposition. You don't value what you don't pay for. So maybe that'd be an interesting study to do. You know, maybe when you pre-appoint someone, you charge them before they show up. The people that pay, I guarantee you they're showing up for their appointments. The people that don't have to pay anything, that insurance takes care of everything, right. Why would they show up? They can just call them back next week. They'd rather go to their cousin's birthday party than, you know, go get a root canal.
I would agree, and I think the further we kick that can down the road, then the less value we're creating, which implies that maybe the Ford truck is more important than the healthcare. You know, maybe, you know what I mean? That's possible. Let me ask you this. You are the dude when it comes to this stuff. The sword, you know, you're slicing and dicing, man.
Right.
Okay. So one of the challenges we run into is, you know, we walk into a practice that we've never worked with before. We take a look at their AR. And I'm assuming that you're going to tell me this is a TechMD thing. Two challenges. I'll give you the first one. One of the biggest challenges we run into is the software never gives accounts receivable. Software gives accounts receivable minus accounts payable, and it gives a net. Do you run into that all the time?
I don't. That's totally a foreign concept to me.
Because you're not pulling it from the software?
No, we are pulling it from the software, but the software is engineered to basically to decipher between what's owed versus insurance or patient. There's probably a really geeky explanation for that I have zero knowledge of.
Okay.
I just know it works.
One of the things we find all the time is the credits are thrown in other words. And Dentrix and some of the other softwares will allow you to put, you know, you can put a stringent sort of, I forget what you call that on the front end. You can put parameters on that.
Filter.
Yeah, but it'll still throw credits in that. You guys don't deal with that because you know how to work through it or whatever.
Yeah, I mean, we do see, sometimes you do see credits coming through, I guess because it is a balance. But of course, that's always a major concern too. You know, if you're sitting on a bunch of credits, gosh, like not only have to talk about the ethical complications that can arise in something like that, but when you go sell your practice, it's just happened to me.
Really?
I was talking to a practice and they owe it, you know, the owner owes a bunch of money to people. Well, how is that going to affect the sale of that practice?
That's a good point, yeah.
And like, gosh, like you expect a new owner to start refunding everybody their money? Is it the old owner? You know, if the owner that owes the money dies, what happens there? So yeah, that's a whole different can of worms there.
Okay, let me throw the second thing at you, because here's what we see a lot when we first walk into a practice. We run into a situation where there's and we always have to decipher because there's a lot of credits thrown in there.
Right.
And we don't have a true number at the bottom. You know, it'll say a balance of $85,000, but you look in there and there's $40,000 worth of credits. You got to add that back before you even get the true balance.
Right.
In this case, it wouldn't be 80, it'd be 80 plus 40, right? But
Yep.
the other thing we see is a lot is, and I know you run into this all the time, current scenario is, you know, whatever it is, you got 30, and then you got 60, and then you got 90.
Yep.
So everybody knows that the over 90 are the hardest ones to collect.
You're exactly right.
What is the magic verbiage? Is there the magic bullet, man? What is the verbiage that you use? I mean, I see you all the time putting stuff out there where you guys are able to do things that most people aren't able to do when it comes to doing what you do. What's the verbiage that you would say best works? And I know it's case specific and all of that, but go ahead.
Yeah, I look at it differently.
Okay.
You know, basically it's a proposition of outsourcing, right? Outsourcing makes sense is someone can do it more profitably, at less cost, and more efficiently than you can do it yourself, right? That's basically the definition of outsourcing.
Sure.
So it's like dentistry. Like literally, if I had a loose tooth, my daughter's losing her teeth, right? I could take her into my workshop and I could pull it out with a pair of pliers. There's a great YouTube video on this. There's two guys that actually do this on YouTube. You gotta check it out. It is hilarious. They're drinking beer the whole time. It is a riot. You can do that.
Are they from the South?
I hate to classify it, but I do believe they have Southern accents. But since we're in the South,
you and I can say that. That's right. That's
right. No one can make fun of your baby brother, but we can.
Right. That's right.
Right. But
That's
so
right.
the point is, like, you can do things yourself.
Sure.
You can fix your own car. You could, get on Google and figure it out. You're going to get dirty. You're going to do it. It's going to cost you more. It's going to be tons of time. It's going to be frustration. You may still need to bring it. So I guess the point is, if you can't do it yourself or you don't want to do it yourself, then you have to find partners that you can trust to do it for you. And so squeaky wheel gets the grease. If you're overstaffed and you can get your people to do the statements, to do the phone calls and actively do that, go for it. But the reality of it is that's just not happening.
Right.
About 90+% of all the practices I meet with, they say, listen, Andy, we're awesome. We do our statements. We do different colors. And then we send it certified. And then like, oh, wow, we got a sticker that really scares them.
Right.
And then when they're using us and they're showing us the ledger, oh, the patient got a walkout statement 4 months ago.
Right.
And it has not gone anything since.
Right.
So where's this great process? So again, you can do it on your own. You can do the statements of phone calls. If you can penetrate that, you have the staff. In most instances, Sean, it just doesn't make sense.
No, that makes total sense to me.
It's easier to go to someone else and do it for you, and you can focus on what you love to do.
There's a reason that dentists are in desire, and it's because you shouldn't pull your own teeth. I totally get that. So
I mean, you're a consultant, right? Like you give your secrets away. You're doing this podcast, and you tell people what to do. And the question is, okay, maybe, and you're not scared about it or shy about it because maybe 10% of the people will. 90% say, you know what? Thanks for educating me on how to boost my hygiene program. Sean, I really need to pay you to do it for me. I just don't have the time, effort, money, or the chutzpah to get this thing done. Right?
That's a really good point. I'm not sure what chutzpah means. That's not a Southern term. I don't get it. But anyway, no, that's a great point, Andy, and I don't disagree with you. There are professionals out there. Why in the world would you want to do it yourself? And I agree with you on that. So 50 to 100% of an average monthly production would be sort of the book smarts answer for give or take on what would be considered healthy. There are plenty of third-party people out there. Green Sky Financial is one that we talked about.
Yep.
And basically what I'm learning from you is at the end of the day, it's really based, all of this, in terms of stats, healthy, not healthy, it's really more about where is it you want to be, what is your comfort zone, what are you trying to accomplish. It's much more customized, and that is what you guys do.
I believe that. I mean, I've had dentists hire me so that their spouse can take lunch. And that's more valuable than what I'm going to collect is happiness, right? They don't fight when they go home, right? There's no, negative conversations about what you made me do that day. So you're right. Beauty's really in the eye of the beholder. But my job is to obviously talk to those people, figure out where the pain points are, and then customize a plan that makes sense for the practice.
Andy, that is awesome, man. What kind of results do you guys get? I know this. Share it.
Yeah, I mean, listen, it's like, again, pulling a tooth. You can't floss a tooth that needs to be pulled. Right? Like, don't do tooth whitening when you got to do an extraction. Makes zero sense. And the older it is, the colder it is. You said it perfectly. So garbage in, garbage out. You give me or any other company out there 2-3-year-old accounts, you might as well just throw the statements out. Of course, it'd be a HIPAA problem, but you would literally just just start calling random numbers on your cell phone and saying, hey, is this the patient? Can you please pay me? Like, you are just rolling the dice. You're going to Vegas, hoping and praying that the strategy is going to work for you. If you utilize a company, and whether it's me or anybody else, the younger the account is, the more it's collectible.
The older it is, the colder it is.
You got it.
So don't call in the Ninja expert if you've, at the point at which you've let it go to beyond control. Get a hold of him early, get him involved, and get him working for you.
I'm a ninja. I am not a magician.
Andy, I very much appreciate you sharing all the things that you share with us today. Really good stuff, my friend. Looking forward to having you on again. Thank you very much.
Oh, man, this is like a day come true for me. I appreciate you having me on. I love what you're doing. You got great energy. You guys are really knocking it out of the park. You're doing fantastic things. So I'm just honored to be a part and contribute to your podcast.
Well, thank you. I appreciate that. Very good stuff. And these guys can find you at andycleveland.com or dentalpracticeninjas.com.
Yes, sir.
AndyCleveland.com, dentalpracticeninjas.com. I appreciate very much you guys joining us. This has been Dental Profits, where we come to you live each week, talking about ways so that you can have happier clients, better results, make more money, and as Andy said, enjoy the ride. I'm Sean Crabtree. See you next week.
Thanks, guys.